India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me, my colleagues Nigel D'Souza, and today we have Rima with us in the studios. And we're waking up to slightly, well, should I say, softer cues.
Yeah.
But guys, thank God it's Friday.
Well, that's right.
It's Friday the 13th.
Yeah, indeed.
Yes.
But I think there's one word that India's chanting since yesterday, right? Gukesh. Absolutely. It's a historic triumph,
Yeah.
the youngest ever world champion. It's an indescribable feeling of pride.
Absolutely.
For all of us watching from the sidelines.
Oh, absolutely. It was quite a stunning win, and for him to do it, I mean, literally a child prodigy of sorts, the youngest to win the World Chess Championships, and the only second, I think, Indian after Vishwanathan Anand to have done this. It's a matter of immense pride for this young man, for his family, and of course for the entire country, the country that he represents. Extremely happy and proud this morning, all of us, I'm sure.
Well, that's right. And, it tells you, right, a few years ago, he said he wants to be champion. He persevered, he, put in the hard work. And yesterday, he got that opportunity, that window of opportunity, and just seized it. A start of a new era. And in fact, the new champion on the screen. Emotions running very, very high. And, even after the game, I think he looked out and he set up the board yet again.
Yes.
So, that's what a special feeling for every Indian. Well done, young man. A new era, so great.
Absolutely.
But back to the markets, and it was a losing Thursday for US markets.
And that's running off on Wall Street as well. I mean, we are waking up to really challenging cues from the global standpoint, because there's been this wide sell-off on Wall Street, and Asia is kind of picking off on it. Some of the markets on your screen, for instance, Hang Seng is down almost 2%. So what's caused it? Well, primarily blame it on the US wholesale inflation number, because this producer price number that came out yesterday, it was above market expectations. The November PPI is at 0.4%. Expectations were that it will be just about a 0.2% increase. And even if this is, of course, month on month, even if you look at the year-on-year comparison, then at 3%, wholesale inflation has come in at the highest rate since February of 23. So this inflation print got the market spooked. On the equity side, it meant a wide sell-off, and actually a much bigger sell-off in the Russell 2000. The Russell 2000 was down almost 1.5%. The Dow and the Nasdaq, S&P, they were down about 0.5% thereabouts. So, big fallout in terms of US equities. But even in bonds, look at the way the yields moved. Immediately after this print, the 10-year popped up by almost 6 basis points. Even the US 2-year yield, that moved up by 4 to 5 basis points as well. And we'll pull up the 10-year right now. It's around that 4.3% handle. So yields have moved higher. The dollar moved higher. The dollar index, as we can see, has now crossed again 107. So these are sharp moves that have come in overnight. For the dollar, the added sort of issue was the ECB rate cut. The euro anyway had moved lower because the ECB is cut by 25 basis points, which was along expected lines. And now the focus is entirely on the Federal Reserve. Before this inflation print, the probability of getting that 25 bips cut from the Fed was about 67, 68%. But now that probability has moved much higher. So it's all eyes on central banks. ECB has done it. Fed is expected to do it. And the BOJ, a lot of people are saying, could be actually on hold. Even the BOJ, Bank of Japan, is meeting next week. More macros to track here in India. And actually, we're better off because from a macro standpoint, we have good news. We have inflation coming down and we have IIP picking up. So the number that we got on CPI inflation for November, from that pretty ugly looking 6% plus, we've at least come down to about 5.5%. So that's the good news. And food inflation has cooled off, not as much as perhaps what one would like to see, but it's down to about 9% right now. The IIP number has shown a marginal uptick. It's not a sort of a big bazooka IIP, but nonetheless, at about 3.5% versus 3.1%. So that's the good news. For the market, what we've seen is consolidation this week. And the reason I'm, looking at it positively is that in the week of consolidation, the zone of 24,500 to about 550, that's held beautifully. It's not broken. Now, the problem is overwhelming negativity in terms of global cues. Otherwise, next week is Fed. and we're going in with the expectation of this 25 basis points cut. Whether the market starts taking some positioning, you start lower with a gap down and maybe then build on it, we'll see. But yeah, we'll have to see if India can be an outlier. Otherwise, it's a deep sea of red today.
Indeed. U.S. markets, I think, are down now for the 6th day in a row. The Dow, and week to date, the Dow Jones is down close to about 1.5%. But back home, as you said, right, it's been so much of consolidation. It's 5 trading days of lackluster sideways move without any big directional bias. So markets have been pretty much in that range, that well-established range of about 24,500 on the way down to 24,850 on the way up. Only yesterday, after that initial pop, markets started gradually grinding closer to the lower end. This 24,500 is going to be an important support for our markets because that's where the Nifty 10-day exponential moving average, the DEMA, is placed. So 24,490. The small cap index, till Wednesday, even if the Nifty was, consolidating a bit of a negative bias, the broader markets were outperforming. But yesterday, the mid-cap index fell in line with the frontliners. The small-cap index snapped a 14-day winning streak. In terms of flows, well, it's the same picture all over. The FIs sell. They sold about 3,560 crore in the cash market. The DIIs pumped in 2,646 crore. And just a little more, some more on the Asian market picture because it's firmly in the red now. So, Subi spoke about Hang Seng, but even pull up a Nikkei, that's down 1.5%. You've got Taiwan, which is also open mildly lower. So across the board, there is red on the Asian market screen. Shanghai is also weak. And even yesterday, the press conference coming out of China, again, it's giving you a positive sentiment, but it's lacking any fresh policy details, any big stimulus that's coming out. That bazooka was again missing, and that's sort of disappointed, investors and traders alike.
Absolutely. Well, that's right. All the cues that you're stating perfectly ties in with Friday the 13th, right? You have the Asian markets are under pressure. You have the Dow that's lost out for the 6th straight session. And you have the dollar index, which is a very, very important cue. Well, that's at around 107 odd. So the cues are perfectly stacked up for Friday the 13th. Query is that whether or not the bulls can surprise and in fact, fight back at some time during the trading session. We'll see how that goes. Well, moving to yesterday's trading session, there was unwinding of positions, particularly on the Nifty Bank because the open interest was lower. You had the Nifty as well that had open interest lower. So there was unwinding of long positions is what we saw. And in terms of, the FI data, well, that perfectly collaborates with this because the long positioning was down by close to around 20,000 contracts or thereabouts. Shorts, well, it was mildly lower, and the long positioning now has come down to around 40%. So in short, in the last few trading sessions, the absolute number on the net short side has just moved up. So it was at around 45,000 contracts. That's moved back up to around 70,000 contracts. So shorts getting into the system. That's as per script. That's something that we like, right? There's some shorts in the system. And the clients, well, they have gradually rebuilding their long positions. They had booked some profits, and that's gradually moving up. Just one point, last Friday, we had made this point, you have a big RBI meet, and it wouldn't hurt anyone to take some money off the table. I think that calls worked pretty well because you have not lost out at all, and the index has gone absolutely nowhere. Moving to the options data then, the 24,600 call, 24,600 put, both of them were fairly active in trade yesterday. Someone is playing a short straddle, then they're looking at pocketing 300, 350 rupees odd, and they're playing for a wider range. But since that 24,600 put had a fair bit of open interest build up, the premiums around 170. I think that 24,400, 24,450 becomes an extremely crucial mark in terms of a support zone. So that's why I'm saying the support zone is in this vicinity of around 24,400, 24,450. We have the 50 DMA closer to those levels as well. So that's why that's important. On the upside, I think 24,900 marks becomes a bit of a resistance zone. Stock that I'm looking at is Nalco. Yesterday, there were big shorts that got built into the system. That's because of alumina prices cooling off. But when shorts are already in the system, the stock has now moved into the F&O band. So it falls only when you see cash market selling. So we'll have to see whether or not the shorts get trapped on the wrong side because now you cannot do any fresh shorting on this one. Massive open interest build up is what we saw on this counter. So I'll keep an eye out on Nalco.
Okay, thank you very much for that. Let's get to the equity calls then. Mahesh Nandarkar of Jefferies says the investment cycle has now entered its 5th year and it should go on for another 4 to 5 years. He says after strong EPS growth and market returns over the last 4 years, expectations are moderating. He says EPS growth has slowed to less than 10% in FY25 and he expects a 13% EPS growth in FY26 or calendar year 2025. He says domestic flows remain strong, but equity supply has caught up, capping market returns. Their December 2025 Nifty target of 26,600 implies a 10% total return. They are overweight banks, telcos, two-wheelers, healthcare, real estate, IT, and power.
Okay, all right.